Hey everyone, so this is the 27th lesson, and after quite a lot of theory, in this one, we will dig into some live examples, that I think will make at least some of the really important information click. So, I picked up the most recent market maker sell model that we have on Euro, as it will be more relatable, and these examples will click for you more as we've been looking at them for almost the whole week. So right in front of you, we have a Euro 30-minute time frame. This is a pretty clean and easily readable market maker sell model. Price created the original consolidation, expanded higher, from there we had a first retracement, then a second one. Price didn't hit a key level, but DXY ran into some clear PDAs, also there was SMT divergence in play. So, right from there, price dropped lower, created a balanced price range and gave market structure shift. Okay, so now moving forward, let's mark the buy side and the sell side of the curve on this market maker sell model. So we have two sides, buy side on the left, and the sell side on the right. I added a vertical line there to help you see it more clearly. Now what we touched on the very end of the 26th lesson, I mentioned that when we're looking for potential reversal areas, on the right side, we can use the left side. What this means is that we pair the selling that happened during the first and second retracement on the buy side of the curve. Usually when the retracement is bit more messy and or complex, we can go to a higher time frame to have a bit more, so to say, beefy candles. So, where the price is at right now in this example, our aim is to find a key area of where price would reverse from, if we see a bullish retracement. So the first thing that we do is, we take these three down candles and extend them to the right, into the sell side of the curve. As I just mentioned, this was a small selling part that happened on the buy side of the curve on the first retracement. This area a lot of times will act as a so-called resistance, same with the selling that happens on the second level retracement on the buy side of the curve. In most cases, we will use the whole range, including wicks. However, when we have huge wicks like that, we can focus on the bulk of the volume to get a more refined area. Now, you probably remember what's the next thing that we look for, that is imbalance that was broken, that for us will also act as a potential resistance. So here on the left side, we had this buy side imbalance sell side inefficiency candle right here. What we do is, we take this whole range, and extend it to the right. So now we have this rough area of where price would potentially have some trouble breaking through, if price decides to give one more last bullish retracement, before taking out the sell side liquidity below the original consolidation. However, remember that this won't be always present and or lining up perfectly, but when it does, and the whole setting is right, it usually works wonders when it comes to identifying a rough range of where to look for premium PDAs on the sell side of the curve. So, talking about that, the first thing that we can see are these low resistance highs that happened during the Asian range. So instantly that's not something we want to focus on, so we look higher, and what we have there is this bearish order block, as well as this bearish fair value gap here. So we have a nicely outlined range now. If price decides to go for one last bullish retracement, inside this sell side of the curve, before completing this market maker sell model, then from what we have here we expect to see price run this low resistance liquidity here, and ideally treat this area of bearish fair value gap and bearish order block as a key level to reject and expand lower. So, I think it just became a bit more clear to you guys of why I called this exact area on Friday's London kill zone as our potential key spot that could send price lower, as it was forming a smaller 5-minute time frame market maker sell model as well, inside this bigger 15-minute/30-minute market maker sell model. So now, as we're on the replay mode here on this 30-minute time frame, let's go forward using this TradingView replay mode that will give bit more insights to you guys of how price approached it during the London kill zone. Now, notice how here price on the 30-minute time frame built a clearly visible 5-minute consolidation right here during the Asian session, and then started expanding higher towards our key outlined area, building a buy side of the curve of the 5-minute potential market maker sell model in play, which is inside of this bigger 30-minute sell model, acting as the last retracement, before price declines towards the original consolidation. And here price completes this bigger 30-minute market maker sell model, and as the last retracement, it also formed a smaller fractal which was a 5-minute time frame market maker sell model. And what we will do now is, we will drop to the 5-minute time frame to see what happened there. Pay attention to how fractal price is. Today's lesson is just a perfect example of that. So here we have this 5-minute sell model here without any drawings. At first it's not overly clear, however, once price started building this consolidation here, and we saw it during the London kill zone on Friday, and price gave this first expansion higher. If we zoom out, this is exactly of what we talked about in the last lesson. We had a nicely defined premium area. We knew that price is even in the bigger market maker sell model, that gives us a clear direction and draw on liquidity. So what we now wanted to see was very simple. Price start building the buy side of the curve, meet our key area, key level, etc. There are a million different ways we could call it, and roughly from there turn into the sell program, and attack the original consolidation of this 5-minute market maker sell model, and of course, the original consolidation level below of the 30-minute model. So now once we add all the drawings, everything becomes crystal clear, doesn't it? For example purposes, to keep it nice and clear, we again split this 5-minute fractal into the buy side of the curve and the sell side of it. In this specific example, the buy side was way more neat and clear than the sell side, and this long position right here was a really nice long play from this bullish order block and fair value gap towards our key premium area. Okay, so now again, just for example purposes, we will say that price didn't take out the original consolidation after the first bullish retracement, and pulled back before it, so just ignore this wick here for now, as I want to go through the same process as we did on the 30-minute chart, to bring it home of how we pair left side with the buy side inside a market maker sell model. So again, we look left at the buy side of the curve, we look for the area where selling took place, and we have these two nice bearish candles, so we want to pair the buy side of the curve with the sell side of it, so we extend this level to the right side. Then what we do is we look if we had any imbalance points there, and we had this bullish fair value gap, so we also mark that area and extend it into the sell side of the curve. Lastly, we look to pair these potential zones with the bearish PDA that's pretty much aligning with that area, and what we have is this bearish fair value gap right here. So, here's the magic, price retraced right into that area, and then took off towards the sell side. Now, notice how this gray zone, the one we marked the selling that took place inside the buy side of the curve, it held the bulk of volume there, before sending the price lower, as only wicks went above it and price held candle bodies in that area. Pretty amazing, right? Remember that we had two market maker sell models in play there, so price was really pushing fast there, hence it took that 5-minute original consolidation this quickly, and why I asked you to ignore that fact for example purposes. Lastly, to wrap this lesson up, and to make things even more interesting, notice this fractal right here, that happened inside the buy side of the curve here on the 5-minute time frame. Now we jump on the 30-second chart, and this is what we have. I think you understand what I mean. We have an ant-size market maker buy model on the 30-second chart, inside the buy side of the curve of the 5-minute market maker sell model, which is inside an even bigger 30-minute market maker sell model. Do you see how we can just go and go and go like this? This is what I've always meant by saying that price is fractal. So, as this sell side of the curve of this 30-second market maker model had a very slow and choppy phase of going down, obviously there's nothing clear there that we could pair the sell side with the buy side here, but the whole example is that this is how we build everything top down, and how the whole puzzle comes together, starting with the daily direction. So, that is it for this lesson. We will dig into even more examples later on. I hope it made some of the things that we talked about in the 25th and 26th lesson more clear, and as always we will talk soon. Take care guys and enjoy your weekend.